Welcome back to Crypto Lion. Don't forget to like and subscribe to this channel for more videos on Bitcoin and other cryptocurrencies. Today we'll be looking at some Bitcoin price predictions. Bitcoin's price often drops quickly and seemingly for no reason. The price of Bitcoin has been on a seemingly unstoppable ascent since November 2020, buoyed by increasing institutional interest after PayPal's foray into crypto custodianship, tightening supply thanks to the Bitcoin halving mining reduction and the weakening US dollar. Bitcoin's 2020 bull run, while sharing a similar time frame to its 2017 predecessor, has seemed markedly different and more determined. Yet days before it recovered to a new peak in December 2020, shocked investors witnessed a sharp price drop from November 25th to 27th. From a drive towards the $19,000 range, it went skidding down to the $16,000 level within hours. In a mere 2 days, it shed $3,000 in value and revived a sobering case of déjà vu in more seasoned crypto investors, used to the periodic oscillation between fear of missing out and fear, uncertainty, and doubt, which separates the weak investor hands from the strong. The November crash was attributed to rumored legislation that would target crypto wallets before the end of Trump's term. However, this surely couldn't be the sole reason for such a strong reversal, after Bitcoin brushed the BitMEX prosecutions with barely a hiccup only weeks earlier. With the lion's share of crypto's total market cap, Bitcoin shouldn't be as volatile as other less established cryptocurrencies who frequently experience so-called pumps and dumps due to low liquidity. There are many factors affecting the rise and fall of Bitcoin's price, the first digital currency of its kind, which derives its price from a fixed, deflationary supply and fluctuating and cyclical demand. The reasons stated before were undoubtedly driving factors that led to the rise of the digital asset, but what are the factors that caused the drop? The drop can be partly attributed to crypto whales who began to deposit large volumes of their Bitcoin holdings to exchanges in order to cash in on Bitcoin's record highs. This is similar to what happened with Bitcoin back in the 2017 bull run, when whales contributed to a major shift in the cryptocurrency's value just by moving their assets to other platforms. Bitcoin remains under pressure since the January 8th high, with its main pattern being a channel down. On the 4-hour chart, the RSI and LMACD indicators have formed sequences similar to the mid-November, mid-December 2020 consolidation phase. As you see on the chart, those are bottoming patterns formed within a short-term accumulation phase. The new bullish wave after this accumulation phase came once the 4-hour MA50 on the blue trend line and the MA200, the orange trend line, converged so much but without making contact. At the moment, those two are close to making contact. If they don't make contact then, based on this bottoming sequence, we may see a new aggressive bullish wave. We already see a small channel up forming within the channel down, which is encouraging. If they cross though, they will form a death cross, and that will be the first time we'll be seeing one since August 29th. As you see on the chart below, that wasn't the end of the world, but it did deliver a negative 15% pullback and took the BTC USD 50 days to recover the price at the time of the death cross. From the current level of the 4-hour MA200, a negative 15% pullback would put Bitcoin around $28,000. The chart shows an update on today's price action. Bitcoin made contact with its MA50 on the 1D timeframe on the blue trend line for the first time since October 8th, roughly 110 days. The RSI is also testing its support zone, which is holding since mid-March 2020. Can this be enough to contain this correction from January's high? The answer may be hiding in the 2019 bull run, which was the first since the December 2018 market bottom of BTC's bear cycle. During that run, the price touched the 1D MA50 after roughly 150 days on July 19, 2019. It only held for 1 day and then broke below it, making a double bottom that would only cause a temporary bounce before new lows that would see even the 1D MA100 break, seen on the green trend line. Notice that both 2019's and this chart's parabolic rises share a few common characteristics. Both rose by approximately 385% from the time they last made contact with their 1D MA50 until their respective peaks. Both pulled back from their peaks by approximately negative 30% on the low before contact was again made with the 1D MA50. And at the time of the 1D MA50 test, the RSI was on the support zone. What do all of these things mean for BTC USD now? Probably that if the 1D MA50 doesn't hold, the price will target the 1D MA100. Practically, that would mean the end of the late 2020 parabolic run and the beginning of a new accumulation phase. Nothing is said, of course, and I have analyzed the importance of the 1D MA100 on previous studies, and it's been holding since April 29, 2020. Before, we were speculating a bearish movement till the blue support at 28,000 to 30,000. Bitcoin made it there now, which we call the decision area. Phase 1 is done. Now we'll be looking for buy setups since Bitcoin is sitting inside a support zone. Unless, as mentioned before, Bitcoin breaks our blue zone downward aggressively. Then our support would become resistance and we'll be looking for sell setups on its retest. For now, our blue zone is still acting as support, so we'll be waiting for a third swing to form around our upper orange trend line to consider it valid. And then, and only then, we'll buy on the next break upward, after a momentum candle close above the gray area. It's a big success for us crypto traders to see Bitcoin breaking away from previous all-time highs. Well, it's not yet over, as price is currently consolidating above major breakout zones, and we should prepare for potential pullback and not panic when this happens. The chart clearly states the possibilities. We have the current monthly candle looking pretty ugly, which if closes this way will mostly bring the price down for the potential and healthy correction. In a short-term view, we may still have a last surge towards 36,000 to 38,000 before finally dropping. But we must pay very close attention to these zones, as any break above it will likely give bull huge momentum for possible trend continuation. Bitcoin has formed this major decisive ascending wedge formation below several important bearish resistances. And as suggested, the bearish wedge confirmation was more likely and should have been expected, which now finally happened in the schedule, as Bitcoin made the breakout below the lower boundary. When looking at the chart, we can see how Bitcoin finalized this ascending wedge formation mainly in the schedule, and already moved on to the 300 EMA in green, from where it now initially marginally bounced to the upside. Also, Bitcoin moved into the ascending wedge confirmation range, which is a bearish range here, and Bitcoin still has serious resistances lying above in the structure, which when touched will likely show up with a bearish pullback to the downside. This should not be underestimated. If Bitcoin shows up with this bearish edge, it is more likely that it pulls back rather than moving above the descending resistance line and forming a new bullish paradigm. Taking all these factors into consideration, it's important to note here that Bitcoin has established these serious bearish signs, which shouldn't be taken lightly. Here at the channel, we already prepared long before this happened, as we executed the first short 8th of January and managed to hedge accordingly during this time until today. It shows us one more time that the cryptocurrency market is a very volatile market with many ups and downs. This is why we should be prepared for such changes as professional traders. Then again, many believe that the price drop was to be expected, and is in fact a good thing that's allowing Bitcoin to let out a bit of steam before it ascends dramatic new heights. Especially since this price trend is still similar to the pullbacks before that ranged around 20% in other recorded bull runs in Bitcoin history. But the drop has been accompanied by a massive liquidation of multiple derivative positions, amounting to almost $2 billion. This led to market overheating, which is seen from the futures market being overleveraged. Basically, this meant that the value of perpetual contracts has become much greater than the value of Bitcoin and its underlying equity. Much of Bitcoin trading is so complex and interwoven with sophisticated trading and institutional products, such as futures, leverage margin trades, and decentralized finance protocols. A sudden slide in Bitcoin's price can set off a chain reaction of automated responses, executed by trading bots within milliseconds, leading to an abrupt oversupply of Bitcoin and a further steep drop in price. Until Bitcoin crosses the promised land that lies yonder between those two stacks of high society, it's still anybody's game, and savvy investors know this. As a result, when the price dips sharply, nerves get frayed and sell buttons get pushed. While many Bitcoin holders may propagate the unstoppable rise of the currency and predict near-time highs totaling hundreds of thousands of dollars, in private, they might not be quite so optimistic. As the saying goes, buy the rumor, sell the news. We hope you enjoyed this video, and if you did, please give it a thumbs up, subscribe, and click that notification bell. What's your opinion on the current trend of Bitcoin? Let us know in the comments below. Good luck and happy investing.